Are you thinking about starting a business but feeling overwhelmed? Well, don't worry, you're in the right place. In this video, I'm gonna break down 10 simple steps on how to start your business from scratch. To be honest, I wish I saw this video in advance of starting my own company. It would have saved me so much time, stress, and money. So by the end of this video, you have a clear roadmap to get started with confidence. Plus, I'll tag on some bonus content at the end. Hi. I'm Kevin Andrade. I'm a CPA licensed in the state of Maryland, but I work with clients all over the country. And with over 10 years of experience, I've been helping small business owners and high W-2 earners legally and proactively reduce their taxes. So if you're looking for tax tips to save money or grow your wealth, please subscribe. And with that said, let's get into the video. So step number one, before you decide anything else on the business, you need to know your why. Why do you want to start a business? Is it to make more money, gain freedom from corporate management, help your community? Knowing your why is critical. It's going to keep you going when things get tough. And I'm telling you now, things will be tough for not just the first year, not just the second year, not just the third year, but entrepreneurship is an ongoing beast. And so knowing your why, writing it down, even reflecting on your why as an affirmation is super, super important. If you haven't already, I recommend reading the book Know Your Why by Simon Sinek. And once you know your why, let's move on to step two. Step two is setting up clear goals. I always say, dream big, but plan smart. Where do you want your business to be in 10 years? Where do you want personally to be in 10 years? How about 5 years, 3 years, or even just 6 months from now? You need to get clear in your goals, both your business goals and your personal goals. Because as you take this entrepreneurship journey, you'll learn that they both intertwine with each other. And breaking down your big goals into smaller goals, for example, your 10-year goal is to make $1 million, but in 6 months, you can break that down to earn your first $50,000. Moving on to step number 3 is crunching the numbers. It's time to talk money. And you don't need to be an accountant or a math genius, but you need to know your numbers. For example, what are your startup costs? Are you going to purchase a storefront? Are you going to have little or a lot of overhead? Are you going to hire contractors to help? Are you going to hire employees? Do you need office space? Do you need equipment? How much equipment? What does that look like? How much do you need to purchase to be operational? You have administrative costs like website, licenses, etc. So step 3 is all about budgeting. Get an idea. It doesn't have to be exact. You just have to have an estimate and revisit the estimate every month, especially in the first year. A simple Excel sheet is a great way to start this. Now, moving on to the good stuff. Step number 4 is to choose your business name. Do you have a name in mind already? That's awesome. But before you print business cards, create a logo, or buy a domain website, make sure you do the following. Number 1 is going to be check if your business name is trademarked. You can do this by going to the trademark website, which is uspto.gov. The last thing you want to do is commit to a business name just to find out that it's already trademarked either the US or elsewhere. Number 2 is to check if your state allows it. Check your state website. Do a search on there and you will confirm if the name's already taken or perhaps any past names or similar names. Number 3 is to check if the domain is available. You can do this by going to godaddy.com or a similar domain website service. Also, a quick tip on your website, being clear is better than being clever. I made this mistake myself. I tried to be clever with my first business name and it ended up causing more confusion. Every time I had to call a client or customer service or registering my business somewhere, it caused more confusion. So remember, clear is better than clever. And lastly, what you want to do before you commit yourself to a business name is check all social media handles. I'm talking about Twitter, Instagram, Facebook, LinkedIn, TikTok. If you type in your business name, what comes up? Is your business name already taken on one of the social media platforms? And if it's available, for example, what if you select a business name related to beauty products? You register it with your state, you buy the domain name, it was available, but you never check social media. And then once you've created all this hard work and build a foundation on your business name, you come to find out on social media that your business name is already taken and it has to do something completely different from your brand, or even worse, illegal or inappropriate. So make sure to double check the social media handles. We're now at step 5 of 10. To pick your business structure. You want to make sure you choose the correct business structure. So I always recommend a lawyer. There's also self-service options out there like LegalZoom, but be careful. The lawyer will help you guide you into the right direction, especially if there's layers of complexity. It also could affect your taxes, asset protection, and how you get paid. So let's break down the 4 common business structures. Number 1, you have sole proprietorship, which is the easiest to start. It requires no legal entity setup. You pretty much earn $1, such as a lemonade stand, and boom, you're a sole proprietor. The con about being a sole proprietor is they have no legal asset protection. There's no formal entity structure in place, so in case of litigation or lawsuit, it'll get messy. I usually recommend sole proprietors when you're first starting out, just trying to figure out if this business even works. Once you start getting in the rhythm, start making some money, then you can look at formalizing that entity structure. Entity structure number 2 is an LLC, which stands for a limited liability company. Now, there's a common misconception that an LLC is going to save you in taxes. That's incorrect. An LLC has nothing to do with taxes. An LLC for tax purposes is actually a disregarded entity and actually puts you back into structure number 1, which is a sole proprietor. The whole point point of an LLC is to really protect your personal assets. Asset protection. So in the event of your business being sued or going into a lawsuit, your personal assets are protected as long as you follow the compliance rules of an LLC within your state. Entity structure number 3 is the S Corp. The S Corp is fantastic. We usually start having the conversation with our clients about an S Corp once you're reaching around $60,000 of profit, because once you get more profit in your business, then that's when the tax burden will come into play. When you have little profits or operating at a loss, you'll have little to no tax liability. But as you get more successful and get more profits, that's when you should consider potentially being an S Corp. It'll definitely save you money on taxes. However, there's a lot of compliance rules people don't pick up on, so make sure to consult a tax professional first. And lastly, the 4th entity structure is a C corporation, which is best for big companies, or if you want to get investors, or if you want to build a company to sell it at one point in the near future. I would say at least 5 years, a C corp could be beneficial. There's a lot of tax strategy plays with a C corporation that may not exist with the others. Now that's a high level overview. I actually go even deeper into the differences and provide examples of each scenario in another video. And if you want to check it out, click the link on the screen and I'll include the link in the description as well. Step number 6, get the right licenses and permits. So this won't be applicable to everybody. However, there are businesses that do require a license or permit to operate. So you want to make sure you check with your city and state to make sure you're legally able to operate your business. Some examples could be having a food permit or having a trade license for an electrician or a plumber. So this won't be applicable to everybody, but it's an important step to make sure you get your license and permit before even starting or earning your first dollar. Step number 7, choosing a business address. It's very common to use your primary residence address where you're currently living as your business address, especially if you're starting out. But if you have an office, you have a storefront, you want to use the business address. Now, let's say you're starting out, you're really just getting off the ground, but you don't want to use your personal address. You want to consider a virtual office or a PO box. There's so many services out there offering a virtual office. When I first started out, I just used a PO box at my local UPS store. This kept my personal home address off the public records when I registered my LLC and kept my personal address private. Step number 8, you want to register your business and get an EIN if necessary. If you decided to be an LLC or C corporation, then it's time to make it official. Now, when registering your business with the state, we always recommend a lawyer. Again, there's the self-service options out there. Most people do that to save some money, but they end up creating the improper entity structure or language, which could hurt them down the line. So in conjunction with registering your business, you want to get your EIN. What is an EIN? An employee identification number. Pretty much is your social security number for your business. You register your business with the IRS. So you want to go to irs.gov and get yourself an EIN number for your business. It's completely free. When you're getting your EIN, make sure you're on the actual irs.gov website. There's a lot of scams out there, so make sure you're on the official government irs.gov website. Step number 9, you want to open a business bank account. At this point, you've already formalized a business name, create an LLC or C corporation as necessary, got your EIN number. Now you're off to the bank to open a business bank account. Keep in mind that depending on the bank, they may have minimum required deposits. What does that mean? If you go to one of the bigger banks, they may require $1,000 or a couple $1,000s to always be in the business bank account to avoid any maintenance fees. Usually, if you go to your local credit union, they have little to no minimum required deposits. So keep that in mind when choosing a bank for your business needs. This is incredibly important if you have an LLC or corporation, because you never want to commingle your personal funds and your business funds together. The whole point of the LLC or corporation is asset protection. And once you start mixing your personal and business money, in the case of litigation, you may do something called piercing the corporate veil, which will pretty much negate any asset protection of your LLC or corporation. At this point in the process, it's safe to say you can create your business logo. Now, we're at the final step, step number 10, which I'm an accountant. I have to say, keep track of your money, specifically your bookkeeping and your taxes. I know it's not your favorite thing to do, but as a new business owner, you have to stay on top of your numbers. What is the money coming in? What is the money going out? It's incredibly important to know these numbers, because how are you supposed to know whether you're profitable or not? Also, these numbers will determine what your taxes will be. So I recommend just starting with an Excel spreadsheet or a Google Sheet. Keep track of the income coming in and the money going out. What expenses are you incurring? If you want software to help you keep track of your income and expenses, then I recommend going with a bookkeeping software such as QuickBooks. You can link your bank and credit cards to QuickBooks and it will help keep track of any income and expenses. But you have to stay on top of it. So once you're at the level of you can't stay on top of your bookkeeping, then the next stage would be to hire a bookkeeper. Connect with a bookkeeper to stay on top of your business finances. And that was the last step. Congrats! You're officially a business owner. But wait, in the beginning I said I was going to give you some bonuses. So yes, Here we go. Bonus tip number 1, look into having business insurance, specifically general liability insurance, potentially errors and omissions insurance, cybersecurity insurance. You want to make sure you're covered from head to toe in the case of a lawsuit, if you get hacked, or another scenario that will require business insurance to help you out. Bonus tip number 2, have an actual marketing plan. There's a fantastic book out there called $100 Million Leads by Alex Hormozi. He goes in depth about how to get customers when you're starting out. I think it's incredibly important to have a marketing plan. Social media and word of mouth is a great start. I recommend reading a book to go even further. And the last bonus tip I have for you, take action. There's so many times people tell me their business plan, what they want to do, what they want to accomplish, how much they want to make, but they never take action. Today's your day. Today's the day you start with step 1 through 10 and just keep going. Don't stop. Be consistent. I wish someone told me all these steps and told me to take action, told me to be consistent, especially when it comes to marketing. You want to make sure you have that momentum going. That's the only way you'll be able to scale and grow your business. All right, now that you're ready to start your business, I went ahead and summarized each topic that I covered in this video in a nice checklist, which you can download for free. The link will be in the description below. When you're just starting out, the main focus is building your business, making it work, generating revenue, and becoming profitable. Once you start becoming profitable, that's when taxes start to become a concern. And that's where we come in. We recommend working with a tax advisor such as ourselves when you start to profit at least $100,000. So you can start implementing proactive tax planning to keep more of what you earn. As you scale beyond the $100,000 in profit, click the link below to apply to be a client. If you found this video helpful, give this video a like and subscribe for more business and tax tips. Until next time, best of luck on your entrepreneurship journey.